Welcome to the VSA Capital Tech and Transitional Energy podcast on Thursday, February the 24th, and a day where we seem to have gone, well, I think war has broken out in Eastern Europe with Ukraine and the Russians invading. Quite a day, really. I think it's caught us all a little bit on the hop, even though it's obviously been brewing up. Markets feel pretty horrible. I think, clearly we all will have our own views on the situation. I'm not saying that we know anything better than anybody else, but what it is going to do is absolutely highlight the geopolitical divide between the East and the West, between democracy and autocracy. And it is going to mean that more and more and more the West is going to think we have got to have our own natural resources, supply chains, processing, infrastructure, etc. So it actually does impact, I would suggest, the whole transitional energy revolution, because certainly the West has suddenly no longer can rely upon Russian gas, can no longer rely upon commodity processing and battery building in China. It is going to want to bring it all in-house. In particular, America, I think you're going to see more and more capability within the transitional energy sector across the whole of the US and Europe. So war clearly isn't a good thing, but actually the transitional energy sector, this will stimulate massive investment, I think, into it, so that we have our own capabilities and we are no longer reliant upon anybody in the East. Would you agree with that, Phil? It's a good starting point.
Yes, it is. And in fact, we've seen, there are announcements from the White House this week on investments that they're making into, localized production of specialist metals that are required for all sorts of industries, but strategic ones as well, and for defence. So I think a lot more is going to be bought in-house, and it has a big impact on engineering globally.
I think that's right. It has an impact across the whole supply chain, doesn't it? Really, yeah. Because headline tends to be critical metals, we must get them, but the reality is the thing about critical metals is who can process them. So, for instance, rare earths that make the magnets that go into EVs, China has nearly all the processing. So we have to start building process plants to create to process the rare earths to make the batteries that go into the EVs in the West. It's the UK, it's Europe, it's America.
Yeah.
Battery plants. We can no longer rely upon the East probably supplying us with batteries. We've got to, I'm talking all batteries, whether it's lithium ion or vanadium flow or sodium, zinc, bromide, you name it. We've got to have our own capabilities. Yeah. And I think in particular, the American government potentially will pump not just billions, but we know trillions of dollars into this space. So once we get out of all of this sort of, war scenario and markets falling out of bed and pretty much everything being sold off, actually, those are the areas that should bounce back very quickly.
Yeah. No, it's going to be a very, very big strategic shift, and I think it's just a shock to the global system. I mean, there's a whole generation, Andrew, who hasn't seen this, including you and I, sort of combating this, on this scale. And I remember years back in sort of tech, and when I worked for the Americans, multinationals, what was it? Think locally, act globally was the thing. The philosophy, and probably reverse that now. There'll be a lot more, as you say, real focus on localization and investment.
Yeah. I mean, I don't want to diverse away from tech and transitional energy into sort of a war podcast, but we probably did sort of see it with Kuwait and Iraq, where the West amassed huge troops and we went in and booted out the invaders, so to speak. It'll be interesting to see whether we do the same thing in this case, because it could be a much bloodier result. Yeah. But I say we're not going to move into that. But I think as a setting of the scenes, that is where you start. And again, actually with the oil price, which is now up at $105, the more that goes up, and the more the gas price goes up, the more we need transitional energy. I noticed today, actually, in the Centrica results, Centrica obviously owns British Gas, as well as all sort of gas distribution networks and things. It was actually talking about how it wants to move into transitional energy. It was talking about actually all sorts of things, nuclear, hydrogen, but also solar and batteries.
Yep.
So, it is the way. This is just going to accelerate some of these things, I think. But it's been a week, actually, dare I say it, we could talk about structural sort of things. But it's been quite a lot of big results, isn't it, Phil? We should probably do a bit of a results and news profile section here.
And I think we should. I don't know where would you like to kick this
Well,
off?
why don't we start off in the sort of, the techie side of aerospace.
Right.
With both British Aerospace and Rolls-Royce, where my friend Warren East is stepping down after 9 arduous years. But why don't you run through how you saw those two figures?
Right. Well, firstly, BAE Systems, FTSE 100. BAE Systems are across all platforms, really, aircraft, Navy, and Army. They had full year results. Their shares, of course, have been doing very well over the last few months. Defence companies are, from an analyst point of view, notoriously difficult to do because they're very complex financially. But if you look at BAE is saying ahead, it said that the current results are up. You can see the sales have risen up from 21 billion to over 21 billion, and the EBIT, the earnings are up nearly 10%. I mean, they're very good. The EBIT's up to 2.2 billion. But I think the key thing is, what are they saying ahead and their expectation? I mean, they're saying they're expecting to grow 2% to 4%, but it's where they're expecting the growth from. And it's electronic systems, air, maritime, cyber and intelligence segments. Well, people realise that BAE Systems do quite a lot in cyber, and it's also, remember, these defence companies as well. They get a lot of revenues from spares and from servicing, and they're anticipating something we're always looking for: free cash flow of £1 billion, and that sort of thing will support investment dividends. But it was a good, I thought, obviously, given the environment, but a good set of results from BAE Systems.
It was pretty good. I mean, obviously on a day when the market's falling out of bed, but because of war, it's the one stock that could go up, and it is up. It's up about 4% rather, and at 627, which is close to a record high actually. And the interesting thing is, if you look at this stock, it's go back to when I came into the market in 1984. I think the price would have been the equivalent of about 100p. So it's not been stunning, but it's had a sort of regular, although it's had its ups and downs with difficulties, and it's transformed itself. It is basically heading from the bottom left-hand corner to the top right-hand corner of a chart, which is always a good sign. I would give it pretty good results today. Yeah.
And it's also something of note. Well, of course, we've lost, Ultra, Meggitt, Cobham over the last couple of years through takeovers in defence. So it is one of the last bigger, really big players in the space. And I guess this does move us on to Rolls-Royce results this morning. As you say, Warren has been there for 9 years. He's had a hell of a tough time. COVID hit air travel, that hit aerospace, and of course demand for aircraft engines. So he's significant restructuring's been undertaken, and money has had to be raised to support the stock. But I think, look, bar the detailed financials and things, again, it's on the sort of important messaging and what they were saying. And I thought the civil aerospace stuff, it was interesting that they're seeing a big pickup of business. It's from Airbus, sorry, and the freighter. And of course, given all of the stresses in global logistics, I guess if planes aren't flying, hauling passengers, they're certainly hauling freight overseas. And so they picked up new orders on that, which was good for them. On defence, they are still seeing work. They ordered the B-52 engine replacements, and the B-52 has been flying Andrew, since the 60s or longer. Astonishing.
Longer, actually. It's amazing. It keeps going, doesn't it?
Yeah. In fact, the B-52s were around during the Cuban Missile Crisis. That was 1962. So they won contracts there, and they have said that they are seeing a significant increase in demand for power systems there, and order intake accelerating. So things are picking up for the business, and it has turned. Just looking for those results, revenue was down slightly. but the gross profit loss they've moved up the gross profit, and it's moved into an operating profit by the looks of it. So
no, look, I think Warren's done a really good job, and it's been very hard, isn't it? So
yeah.
well,
Oh God, yeah.
in case you're listening, well done, Warren. After ARM, that was a harder one, wasn't it? But also, so you know, Phil, the first B-52 actually flew on August the 5th, 1954.
Whoa! Wow!
So, there you go. Right. Those were two of the biggies today. Actually, there was a lot of results coming through today. It's sort of final results season, isn't it? Yep. But we had a few other sort of smaller ones. I don't know if there's any that you want to mention. You might want to mention Ricardo because you like.
Yeah, let's just quick get Ricardo. But this is a very large engineering consultancy firm, so they have huge expertise across a range of engineering, for rail, defence, best known for automotive, but also industrial applications. So this company is packed full of engineers and experts, and they advise companies all around the world on engineering projects. And they had their interim results to the end of December. And this company, its market cap's 279 million, and just in terms of valuations, it's on a 0.9 times EV to revenue and a PEG ratio of 0.5 times, and that's a ratio of the PE to the earnings growth, and a PEG ratio below 1 merits looking at generally from an investment perspective. So they reported their interims, and the revenues are up 13% to 186 million, and their profits, and they need to improve their profit margins. It looks like they have been doing. The profits increased from 8.7 million to 10.5 million on that revenue. So they're improving their margins, which is something we look for. They've reduced their debt from 46.9 million to 38.5 million. And they said their defence revenue increased by 55%, part of that revenue growth. And the sharp-eyed among you may have spotted that they won a 3-year US Army contract for $89 million in 2021. And this is for ABS and electronic stability control systems for US Army vehicles. So, again, here's a company that benefits from defence spend, but from a sort of overall perspective, it's seeing its increase, its earnings increase, its margins increase, its debt reduced, and does look to be on quite a reasonable rating.
We've said, I think, in the past on this podcast that we think it's cheap. It's got some really good products and some really good capabilities. It's perhaps just had some issues in the past. It's maybe almost too sort of spread out, but it is a quality company. There's no question about that.
Mm-hmm.
A couple of little ones. I don't know if you've noticed these two, but Traxys and Trifast. Did you see either of those, Phil?
I saw Trifast, yeah. But,
right, I've got to say, can I just say before you say anything about the figures, all right, that I thought the CEO's statement at Trifast was one of the best I've ever seen, and I'm actually thinking of taking it up for VSA itself. As what he said Trifast has one clear aspiration: to become a much bigger, more profitable company than the one we are today. And I thought, yep, perfect. That is a great vision. But anyway, sorry. Do tell me what you thought of the figures.
Well, hey, you throw me now, as always.
But it was a Q3 trading update, wasn't it? So,
yeah, it was. You know what? I'm trying to rack my brains to remember now. I think because somebody tried.
It was all fine. It was actually all pretty much in line. So I don't think you need to get too excited about it. But it was a fantastic headline statement from the CEO. Well done. And actually on Traxys, which is quite interesting, has some quite interesting technology. It's often a little bit exposed to the railways. People worry, but But again, that was all in line with board expectations and that sort of thing. But it is one we follow. I know a lot of people hold it in their IHT portfolios, so worth mentioning that. Right, look, we're better also because there's actually been. Well, actually, if you've got any other results you want to.
Whipping back to transitional energy, Green Coat Wind. UKW, 3.3 billion market cap. Share price, and this is relevant, share price is 141.8p. They had full year results. Now, Greencoat Wind owns a an awful lot of wind assets, it's fair to say. And their investments, so investing in wind generation, their investments generated just under 3 gigawatt hours of electricity over the year, and that's enough to power 1.5 million homes. And I don't know if you noticed last week during the storms, just for reference, 35% of our electricity was coming from wind generation at one stage, and 22% from gas. So I'll keep my beady eye on that. Anyway, so they Greencoats, getting back to their results, they generated from their assets £257 million. They just in terms of sort of acquisition and expansion, it said they acquired a number of wind assets and increased their portfolio to 43 operating wind farm investments, and they increased the net generating capacity to 1.4 gigawatts at the end of December. From an investment perspective, what is interesting is that their market cap, and this is over the year, went from 2.4 billion up to just under 3.3 billion. The dividend for the year is 148 million pounds, which on that market cap looks like a reasonable. Yeah, here we are. Divvy, respect for the year per share, 7.2p, and the share price is 141.8p. So that looks like it's a decent yield. And the NAV per share is 133.5p versus a share price of 141.8p. So it's only at a slight, relatively slight premium in terms of net asset value. I thought that was a good interesting set of results.
Yeah, it is actually. Yeah. No, I mean, the problem is, by the way, it's great when the wind is blowing really strongly, but you've also got to make sure that you've got some storage with it, because otherwise, when the wind blows really strong, we often chuck a lot of the wind energy away, don't we?
We do,
and we love storage. But actually, this week as well, I don't know. I think you actually probably sent it to me, Phil. And that was a consultancy group called Aurora put out a very interesting report on long duration energy storage in the UK, didn't they? And Aurora is very independent. They're sort of University of Oxford professors and economists. So you can take this with this genuine sort of independent. But that was quite an interesting report, wasn't it? And it says pretty much everything that we're saying, is that, my God, this country has got to start putting in proper energy storage.
It's it did, and we are doing. And there were recent government figures out actually on the rise of storage in the UK, and also the recent figures from came out of the US. And the US, here we are, utility battery storage systems in the States grew by 196% last year to 2.6 gigawatts, which shows the scale of investment going in. And we are, you can say in the UK, we are crossing on with it at a pace.
Yeah, obviously it needs to be all forms of energy storage. This report does talk about all forms. Actually, we always forget one of the biggest forms, of course, is pumped hydro. But with pumped hydro, you do sort of need a bit of a mountain next door to you.
Long planning permission and very long construction timescales. But still, by a massive way, pumped hydro is still the biggest provider of storage. But the investment's going into battery.
Yeah, correct. And a podcast from us without talking about Infinity Energy Systems just wouldn't be the same, wouldn't it? But they have had news out yesterday. Why don't you talk through that news? Because it is actually pretty good news, isn't it?
It is actually. They've been awarded funding from the UK government, and it's from the Department of Business, Energy, Industrial Strategy, BEIS. And it was an award for £0.7 million, and this is for phase one of the long duration energy storage, or LODES, demonstration competition. And they have said that the award will fund planning and feasibility study into what could be one of the UK's largest solar and energy storage projects. Now, this is a competition, bear in mind, there are some other energy technologies, I think, involved in this, but they're at a very advanced stage, and they've said that if that phase one is successful, it's expecting this project to progress through financial close and to the construction of 40 megawatt hours of battery storage using their technology. So it's a cracking opportunity for them. They'll keep, they're going to be updating the market as they progress with this. But I just, we try to put it in perspective that what that size of project means. And if you look at our forecast that we got for this year of just over £26 million of revenue for Infinity, that's on 31.6 megawatt hours of VFBs. And this is a 40 meg potential project. And the key thing in it is that they are working with it. They're overseeing it, this phase one, and they are overseeing it in partnership with Pivot Power, who are, of course, part of EDF Renewables. Pivot Power have a wide range of battery assets across the UK that they are building. So really, really important news, I thought, for Infinity.
Well, I think actually it's interesting because you say they are building. They are planning to build. I mean, if you actually go on the Pivot Power website, you can get a little map, and it's got yellow dots for ones which are built, which is, we all know, the Oxford Super Hub. And they've actually got one down in Kent. They've got a couple of orange dots, which are sort of ones that are, as you would put it, about to come onto construction, so to speak. But actually, most of the map is full of blue dots, which is the ones that they want to build. Now, if you took all of those dots and put, a load of Infinity batteries, my goodness me, what a company that would be. But I'll also tell you that currently, I talk to quite a lot of the people who play the standby energy market. The biggest of which is Mercia Power, probably backed by Foresight. And at the moment, we talked last week about the UK energy capacity market. Right now they are making so much money arbitraging the grid because of this crazy energy prices. I'll tell you, you could take a box fill, just take any old box, a shoe box, almost put it in a field, connect it to the national grid, and you will make money. And I think there's a huge opportunity for putting flow batteries, just putting them in a field, and actually instead of selling them to these people, just lease them to them. They don't even have any upfront costs because you would make so much money, you'd get your money back in no time. I have told Infinity this, by the way.
No, I must remind investors that Infinity is a client of ours, but a very good one. But you are spot on, and spot on being the operative word in terms of the pricing. But it seems to be, it's very much an increasing trend in terms of the pricing that's available for storage capacity. And of course, given the massive fluctuations that we've seen in wind in the UK and the reliance on gas generation. And I said, look, it is a cracking opportunity if you've got battery assets. Yeah.
Now, anything else you want to touch base on pure tech and trans?
No.
I've got a couple of other things.
Right, go for it.
The first one I was going to mention, because it is, we occasionally talk about Aquis Stock Exchange, because it's sort of technology coming into stock exchanges. And I think we have mentioned before here, primary bid, because it's sort of trying to use modern technology to change the way us investment banks work. I noticed that they've raised another huge chunk of money, I think about $190 million, to value them at $700 million. I mean, they are basically just an electronic stockbroker. So I'm thinking of turning VSA in. You're going electronic. I'll turn you into a robot, Phil, and tell everyone that we're electronic trading, and we can be worth 700 million. It worries me, I'll be honest with you, with primary bid for all sorts of reasons. But I mean, it really, they're not doing anything particularly new. They're just electronic. Yes, they've got a good database. Yes, they've got the systems working. But I think it is highly replicable. In fact, I know, for instance, I've gone and looked at the Peel Hunt system called Rex, which in many ways is actually better than primary bid, just not as well known. But it accesses directly into the sort of SIPs and ISAs held at places like Hargreaves Lansdowne. So I think primary bid is actually fairly easily, I mean, it has got a market lead, don't get me wrong, and it's well cashed up, and it's, but you can replicate it. I think 700 million is extraordinary, but well done, Anna, and if you're listening, because you've done extraordinarily well. I would never have quite guessed it. But just don't come round and start trying to take business away from me, because I don't like that. Don't know if you have a view on that.
Moving swiftly onwards.
Yeah, all right, moving swiftly on. We've got one more thing. We are trans tech and brands nowadays. But I also know that WPP had results today. Did you look at them?
No.
No reason why you should, Phil. So don't worry, you're not in trouble for not looking at them. They actually were very good results. And actually they did say very, very strong. No, they didn't say very, very. They said very strong growth driven by demand for digital services, e-commerce and technology. Over one, so that was $1 billion was returned to shareholders. That was all good. But what they did talk about, all right, and I'll literally read from the results. Within digital, one of the big drivers of growth has been the explosion in e-commerce. The pandemic accelerated a widespread shift towards shopping online, amplifying the number of opportunities for brands to connect to consumers on digital channels, whilst also leveling the playing fields for challenger brands. Group M estimates that the global retail e-commerce advanced 20.4% in 2001. This is an area WPP are keen to grow, and I think we want to watch that space. WPP clearly, and we have it's telling you where some of the big boys are now starting to focus on. Obviously, we've got our client Samarkand, had not an easy time recently because China has been quite difficult. Actually, I am told, by the way, that China is, since the Olympics have finished, have already started opening up the market a little bit for Western deliveries, which was closed. And today, of course, they've signed up another new client, Revolution Beauty, which is a UK listed company. I mean, they are slowly but surely signing up everybody, aren't they?
Yeah, they are. They are making super progress. And the WPP. Now, I didn't look at the results today, but I have certainly looked at them before and what their involvement in e-commerce, and they are. I think they've been making a number of acquisitions in the space as well, beefing up their capability in that. So it's all getting very interesting. And yes, and Samarkand are, as you say, are signing up an increasing number of people.
There you go. Right, Phil. Anything else?
No, Andrew. I think that's it for today.
That's good. I hope people had time to listen. They aren't too focused on what's going on in Ukraine. As usual, do feel free to send me and Phil £100. Oh no, sorry. Any comments on this podcast? We're not that desperate, honest. Or if you've got things you want us to discuss, please let us know. Yeah. And we'll speak to you all next week. Thanks.
Yeah, look forward to it, Andrew. Chat next week.